Hey everyone, how's it going? Welcome back to the Stock Market Outlook video brought to you by DeepView. As always, if you want more information about DeepView and what it will offer, definitely go ahead and click the link popping up right now, as well as located in the top of the description below. And you definitely want to check it out and visit deepview.com. Sign up for the waitlist here. In just a few days, we'll be putting on a special presentation, kind of outlaying what the program offers and also what it will offer in the future that you do not want to miss. So definitely go ahead and sign up right here. With that said, let's go ahead and dive right into the market analysis. And as always, if you do find this helpful, please go ahead and take the time to leave me a like down below and subscribe if you want to see more videos just like this one every single week. Looking first at the QQQ on a daily chart, let's take a look at this week's action. And you can see that we were pretty much chopping around here near the 21 EMA before a downside reversal on Thursday and then fall through here today on Friday, breaking below these moving averages. And taking a step back, you can see that this short-term tradable rally was basically started on this day. Nice upside reversal, breaking through the highs right here, this level, starting this move up above a rising 21 EMA. We got a little bit extended above the top of this channel here, started a basing period, chopped around here, broke below here on this day as we broke below this low, followed through to the downside back to the 21 EMA. This is still normal action within an uptrend until we break below that moving average and this moving average starts declining. That's kind of my short-term indication that, I should be stepping off the gas here. I'm likely getting stopped out of positions on these 3 days. And then we're back in a chop fest here below these moving averages. We're finding support at the 200-day moving average, but nothing is confirmed yet. And we basically form another range like we did back in here where a few of these highs connect. This becomes kind of the key level right here. And then we've got a nice upside reversal, oops reversal through that 200-day moving average, the bottom of this range. That falls to the upside and starts another potential move higher towards the top here. However, you can see on this day, we stall a little bit. We do push higher, but end with a poor closing range. And then we kind of break downwards the next day. We're back at that 21 EMA and back kind of in that chop fest. We find support potentially at the 21 EMA as well as the top of the short-term range before this Thursday where we push higher and then close very poorly. Obviously, there's been some negative news catalysts and we fall through to the downside here today. Likely you're getting stopped out during this period as well as during this period if you're putting on positions, and you should basically take that feedback into the account. But that's kind of how I view these market cycles. It was kind of started here on this day, breaking through this range, nice move above the 21 EMA, breaking below the 21 EMA. That's when kind of the warning signs start appearing. Chop fest, potential start of another move up, contest the waters again, then take that feedback into account as you get stopped out of those positions. And hopefully you deal well with these market cycles and leave with a higher low in your equity curve. That, of course, is the end goal. But right now we're below the 21 EMA, 200 SMA and 50 SMA on the NASDAQ 100 ETF, the QQQ, which is holding up better than most. And, it's kind of risk off at this point. Maybe we rally next week, hold here, form out the space. But as of right now, we're potentially starting another move lower below this low. We'll just have to wait and see what happens. Let me know in the comments what you think about all this action with the Fed, the other catalysts as well, the bank that just went underwater. There's been a lot of stuff that could be impacting the market. Moving on to the SPY. This is a little bit weaker. You can see that it wasn't quite as strong. This day undercut this low. Huge fall to the downside, large volume, likely options expiration here, and you've got a gap down. So if this does kind of pop back up through this low, this could be, an island reversal, but right now it's just a downtrend, and this is a very negative bar right here on a pickup in volume, very negative action below all the moving averages. Looking at the IWM, this is even weaker than those two. You can see yesterday's bar, Thursday, undercut the lows of this prior base, and we've got a very bad fall through here on, once again, a pickup in volume. Likely you've got some options expiration going on here, but very negative action, and we're below all the key moving averages. You can see the 21 EMA is really curling down. So a little bit short-term extended maybe. Obviously, even in a downtrend, we can have reactions to the upside, but if we do rally into the 200-day moving average, that could be a spot where we could reverse back downwards. So we've potentially started another kind of leg lower a little bit. So it's time to be defensive and, make sure you're honoring your stops, honoring your sell rules, and making sure that you protect yourself when the market isn't with you, unless you're going to the short side, when these days would have been pretty good opportunities for you to short and put on those positions. So that's pretty much it for those 3 key indexes. Let me know your thoughts down below. And let's move on first actually to the SQQQ, the inverse ETF of the the triple Qs here. You can see that we push through the 21 EMA, so kind of a reverse signal, and we're venturing towards a 50 SMA. So we'll have to see what happens from this point. If we can push through here and get back above that moving average, and this would basically start a potential short-term uptrend in this inverse ETF. Now moving on to the mega caps, let's first start with Tesla here. This is potentially one of the weakest. It had a really nice move off these lows, was forming out a flat base, looked like it was finding support early this week, but then you can see on these days we leaked below it and are now at that rising 50 SMA kind of confluence right there with the low of this prior area. So we'll have to see whether this can form a short-term bottom at this point, but we are below declining 21 EMA, so we'll have to see how it acts as it pushes back towards that level, or we just undercut this level altogether. But this is acting well, kind of in my view, until these 3 days where we undercut this prior low. It was forming a little bit of a flat pace right near that 21 EMA area, below that 200-day moving average in black. But now we're at a point where it looks like we need a little bit more time unless we get a quick reaction and recovery of this level, as well as a 21 EMA off that 50 SMA. But we'll just have to wait and see what happens. From a longer term perspective, we're still below a declining 200-day moving average. This is kind of a key spot I'm watching to see if we can get a short-term reaction. But this level right here is kind of the big one, around 205. You can see this the low of this prior base, and also lines up around this area right here, which was kind of the low of this longer term base that it put in 2021. So that is Tesla. Moving on to NVIDIA. Chips have been acting super well. This was in a nice move higher, nice trend above the 21 EMA. It's still above that 21 EMA, so it's acting better than most. But you've got a downside reversal here on Thursday, fall through to the downside. We remain above this level, but watch out for losing this low, as well as losing this low, the 21 EMA, because that could indicate that needs a lot more time and could fill this gap, and have a date with the rising 50-day SMA. That would be completely normal within the context of an uptrend, especially given market weakness overall. It's still got a lot of work to do to make its way back towards all-time highs near 340. Moving on to Apple. This is still acting all right. It's above this prior low, still above a rising 50 SMA, right at that 200-day moving average, but we're now below a declining 21 EMA, and some negative action here, downside reversal. This was basically the same look as the QQQ, and we'll have to see whether it can stick this and kind of form out a base below 157 and above 143, which lines up with the low of this, as well as the 50 SMA, and we'll just have to wait and see what happens. Moving on to Microsoft is a little bit weaker. All the moving averages are right here, and it looks a little bit weak. Downside reversal here, fall through to the downside, and I'll be watching these lows pretty carefully. Moving on to Meta. This is holding up all right. We had that earnings gap up. Looks like it was forming a U-turn, but this kind of got rejected by the market weakness. Still holding above a rising 21 EMA, as well as this key low, and of course this low as well. But if the market continues to weaken, I would expect it to break the 21 EMA and maybe have a date with that 50 SMA, and maybe even 200-day moving average, which at this point is kind of flattening a little bit and maybe could start to increase if this sticks above this level. Lastly, we've got Google. Looks pretty negative, below a declining 200-day moving average, still in a stage 4 downtrend, one of the weakest of the mega caps, and you can see similar action rally into the moving averages, rejected down from that level and below them as of this point. So overall, a lot of stuff has kind of weakened over the past few days. There's been some shots taken at the leadership as well, and the indexes also show that weakness, especially that kind of mid cap range. The 200 Russell 2000 ETF really shows the weakness that we're seeing in the market. So wait and see what happens. We'll have to see if things can recover quickly, but right now we'll just have to wait for a little bit more time, a little bit more direction, and see if the market can shake off those macro downtrends. And now just going over to a few names from the wider list from last week, sorting by that weekly closing range. Let's do highest to lowest. You can see fours at the top, acted really nicely today, upside reversal off the 21 EMA. Duolingo continues to act pretty well here. bending over a little bit, but it's well above the 21 EMA, well above this prior pivot. And I'd love to see it kind of form out a pivot, or sorry, form out a base here below 130 and kind of around the 110 mark. That would be ideal. Maybe form a 3 weeks tight as well. Other than that, there's not too much to point out here. Airbnb pulling back a little bit, and I'll have my wider list, my focus list, posted tomorrow on Sunday. So make sure you stay tuned to that and subscribe if you haven't already. So overall, definitely risk off here as of this point based on the last 2 days, and we'll have to see what develops next week and see if things can recover quickly. So thanks so much for watching. If you did enjoy this, go ahead and leave a like down below, subscribe if you're new to the channel, and I'll see you guys for future videos. Take care.